Hello everyone, this is Spencer with Numbers Up Finance. Today is Wednesday, March 13th, 2019, and we have another market analysis video for you. So starting off, we're looking at SPY on the weekly time frame. We've been mentioning, and a lot of people have been talking about, the significant bearish engulfing candle that we had last week. Typically, it has been a very strong sell signal when you have a candle that engulfs more than just one, but maybe even two, or in this case 2.5 of the prior candlesticks. But usually what you like to see is you like to see some follow through with that, and we're not getting that right now. If the week were to close right where it is now, with this very big impulsive green candle, I'd say that is overwhelmingly a check for the bulls, not the bears. It's not exactly a reverse engulfing, but it's pretty close to engulfing the bearish engulfing candle that we just had. So again, very significant. Definitely a check mark for the bulls. Now looking at the hourly charts on SPY, we've had a continuation of the theme that we've been seeing so far this week, and that is that the dips are being bought into very, very impulsively. So right here last week we could see we were starting to form a nice downtrend. We came down, hit our first price target, and impulsively broke through this bearish trend line. Even up here, we saw strong overhead resistance that we had small reactions to, but then just today we impulsively broke through that. Now we're up right at the triple top from a couple months ago. We're slightly above it by a couple pennies, nothing significant. It still is, for all intents and purposes, a test of that level. And so we'll see what happens. We'll see how we close this week. If we can close this week above this level, even by a marginal amount, by $1 or $2, it would be incredibly bullish. But there still is a very significant chance, maybe not likely, but certainly not negligible, that we have a significant reaction off of this level and we shoot back down. Perhaps this was the end of that pullback that we were calling for, and perhaps we're moving on upwards. It's hard to say right now. A lot of it depends on how we close out this week and a couple days past that. And so there's two things that I'm going to leave you guys with. The first one is kind of about your time perspective. Obviously everything with trading depends on what time frame you are trading on. But if we take a look at the daily charts, we can see this very overextended run up. I'm not exactly sure what my Thinkorswim is doing with these candlesticks, but they're a little messed up. But still, this huge run up, overextended time, overextended price, all the indicators, the MACD, the RSI, very overextended, overbought side. And then we just got these four relatively small candles to the downside. Maybe that was the extent of the pullback. I think it's somewhat unlikely, but we'll see. And even if this was the initial pullback, right now we are setting up for something that we haven't had for quite a while, and that is a significant divergence on the daily time frame. We can see here that the momentum is finally going down. The blue line is the MACD. So if we go down, come back up a little bit, that would be creating a nice divergence where the momentum is going down, but the price is still going up. And the last time that we saw divergence on the daily time frame was back here with SPY, and that obviously led to tremendous waterfall selling. But that's kind of getting ahead of ourselves, so I'll leave you there. Make sure you keep your numbers up, like and subscribe.